This podcast is provided for informational purposes only and should not be relied upon as legal, business, investment, or tax advice. All opinions expressed by podcast participants are solely their own opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Due to industry regulations, participants on this podcast are instructed not to make specific trade recommendations nor reference past or potential profits, and listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
Welcome to the Hedged Edge by RCM Ag Services, where we're getting out of the field and onto the mic to bring you weekly market updates, commentary from commodity experts, and monthly interviews with the biggest names in agribusiness. Welcome to the next episode of the Hedged Edge. I'm your host, Jeff Eizenberg, and I'm here with my co-host, Ben Hetzel. Ben, it's almost big game season, and we're talking waterfowl. What's been going on? You get out any hunting yet?
No, I haven't. My boys like to shoot some birds. I don't mind going out a little bit. I'd much prefer to shoot the clay version because I don't know. I just for some reason I've always kind of grown up with the idea that if you're going to hunt wildlife, you have to be willing to eat the wild game that you hunt. And I've never been a real big fan of game bird, so we didn't shoot a lot of them when I was a kid. So, but my boys like to hunt, and it's a lot of our family hunts, so it's just good to get out. But yeah, we're coming up on there's tons of people out there along the roads, and sometimes not the safest practices going on with vehicles on these country roads, but definitely got bird season going on, and big games coming right around the corner, and that's kind of what we do. We enjoy that a little more, I'd say. So we're excited.
That's good. Now with all the weather we've had, all the wet rain and whatnot, that's good for birds.
Yeah, I mean it's probably all right in general. It's good to have moisture versus drought, obviously, and it's been crazy. I'd say this year has got to be right up there with a record for a lot of places. I hear producers talk across the trade area that they are at record levels, and when you have thunderstorms, they vary and that sort of thing. But it's been an unbelievably wet year for this trade area, Southwest North Dakota, Northwest South Dakota. I seen a visual on kind of the percentile, and we're at like 150% of normal is what our little area of the world showed, particularly right around where I live near Lemon. And so, yeah, it's good, but yet challenging at times. Harvest is slow to come off. These row crops are ready in a lot of areas, and harvest is definitely moving forward. But we see fields that are ready to be cut, fields that are cut. So we're in the midst. And I know a lot of guys are anxious to get everything out of those fields, especially when we've had some high winds, 60 plus mile an hour gusts. And so guys are nervous about some of these row crops starting to fall down or whatever it is. But again, the wildlife sure enjoy that cover. So more harvest that gets done makes it easier on the deer and antelope hunters. But it's that season forward.
Yep. And speaking of harvest, where are we in the process now? From the elevator's perspective, you guys filling up? You're starting to put up any grain piles? What's it look like as you're driving around?
I don't see too many piles. Out here we do a lot of grain bagging. Of course, talked in the past how that's managed. Wildlife can be a challenge, and especially in a wet year. You were curious how that all kind of works, but for the most part, the bags are fine unless wildlife get on them and start popping holes in them, and then we can have some serious problems. But a lot of people manage them real close now. There's been some train wrecks on bags, but yeah, there's a fair amount of bags around, and guys were moving a little bit of small grain. A lot of canola has been moved, so I think there's places to go with some of this row crop harvest. But we're getting pressure all the time to continue to make space. Guys are pushing us pretty hard to keep the flax and the peas and the canola and the wheat, all that stuff moving because they want to try to market their corn and sunflowers as well. And so it's been a real battle Railroads kind of slipped a little bit. It's gotten a little bit late on placements. So that's a challenge as well. But it hadn't been too bad. And I wouldn't say we're way behind. Seasonally, it's not uncommon to expect some delays, but it's starting to show up a little bit more now as corn harvest is ramping up in the east. And on the railroads defense, this soybean crop didn't move like normal. It was a non-traditional flow for them, and so that they actually, I think, adjusted about as well as you could ever expect a large organization to shift their assets. And fortunately, it's a smooth move to the Gulf. It's not quite as smooth for us up here as going to the PNW, but that flow isn't a bad flow. And so the railroad can do it fairly efficiently. And so that's a positive, unlike the Mexico market where we can bottleneck the border and some of that stuff. And there's some congestion going on there. We're hearing trains are getting held up across the border, slow to come back out. And so that is affecting some of this, but that's just a volume issue, which is good. I mean, Mexico's been a great trade partner. We've talked about it on our podcast. People that tuned in to one of our earlier shows learned a lot about what's going on with U.S. and Mexico, and I think that's key going forward still. But maybe we'll get into a little bit of it today on the rest of the world and what's going on. There's lots of news this last week that kind of rocked the market, and China's still obviously a big topic. So
if you want to listen back to this episode or find past episodes of The Hedged Edge, visit kbjm.com or kndcradio.com under Listen Live and podcast options, or either station's free mobile app under podcasts.
Yeah, that's a great segue. And I'm excited here today. We're going to bring on a special guest that's got a ton of history and experience in the markets, and take a look back in memory lane and understand what the importance is of the exchanges, how the exchange ultimately helps us to manage risk. And a lot of that comes down to understanding the history and how things flow, how trade flows, and how traders are able to manage some of the things you just talked about. People bringing more crop to town than possibly in years past, how the rail systems could potentially slow down movement of grain from Southwest North Dakota down through to the Gulf, etc. So with that, we're going to take a minute here and introduce our guest. We have Fred Seamon joining us from the CME Group. Fred is with us right out of Chicago, been part of the exchange for the last nearly 25 years. So welcome, Fred.
Thank you, Jeff. Much appreciated. Really glad to be here.
No, thanks for jumping on. This is exciting for me. You and I basically have been involved in Chicago markets about the same amount of time. You're saying 2001 for you. I started out working at the Board of Trade in 2000. Our paths have kind of meandered, but we've never crossed until today. So this is exciting.
It's amazing that we haven't, but I started in late 2001 and had been teaching at the University of Wyoming. So it was quite a change for me and my wife, but definitely haven't looked back. It's been the best job I've ever had by far.
Yeah, you can't beat the exchanges. The history goes back over, I believe 150 years. The way in which they started out, being Chicago, the center of the agricultural world, and the river and the rail all coming in, and now today to be the place where innovation is happening left and right. The thing that stands out to me that I think people miss, and I always ask farmers that I meet, I ask elevator operators that I meet, have you been to Chicago and have you seen the exchanges? And unfortunately, they transitioned away in our career time from the pit traded. But I would love for you to help everyone remember the trading coats, the greens, the yellows, the blues, and kind of the vibe that Chicago used to have.
I'm so glad that I got to witness peak floor before, it started to decline. And, that did occur during my tenure at the exchange. And it's all electronic now, but that was we got into a commodity boom in the early and mid 2000s, and you would get really really busy days, and I would hear from merchandisers that it would take some period of time before they would get confirmation on fills. So as efficient as the floor was, and it was extremely efficient, there's a lot of things the floor did really, really well, but the markets had just grown to a point where, the electronic screen just became, the choice when we did start having daytime electronic trade, the choice of most agricultural traders, and it started to evolve away from the floor. But a lot of what happened on that floor is still relevant today. It's just how we manage, and how people enter and execute trades has changed. That's all. But the underlying reason for the markets are still the same.
Yeah, that's right. It's a place to discover price and also manage risk. And the reality that the hedging community is what the exchanges were built for is so important for people to understand. It was built for hedgers. The speculators came in to provide liquidity. And today it's a global marketplace that trades 24/6 effectively.
Yeah. Well, it started as a spot market. If you go back into the 1840s, what happened is, everyone knows the U.S. started 13 original colonies on the East Coast. But as it started to expand westward, it didn't take farmers long to recognize that they would rather farm ground in places like Ohio and Indiana and Illinois than they would Massachusetts and New York. So agricultural production moved westward, but most of the people were still in the East. So at harvest, you'd have all of these farmers bringing all of this grain into the major cities, Chicago being one of them. And they would try to find a merchant who was willing to buy their grain to, arrange for it to be shipped back to the East where it would be consumed. And, some of those merchants were legitimate, some probably not. And, the idea, did all producers get equal treatment? Well, probably not. So the exchange actually started, there's a few things, the Board of Trade was an organization that was started to promote commerce in the city of Chicago, and grain trade was one of those things. So their first idea was just, let's have merchant members and let's have them congregate in one place. And then, a farmer can come to that one place. The members have been vetted, so, hopefully they're all legitimate. And something that we take for granted, but was real powerful at the time, was every time there was a transaction, they would post the price. So that the next farmer that came along probably wouldn't receive the same price, but would get an idea of the value of what they were, selling. And that was the start of the exchange. It was just a spot market. It evolved from there, eventually becoming forward contracts and ultimately futures contracts in the 1860s that didn't ultimately succeed, but corn, wheat, and oat futures all launched on January 2nd, 1877, have existed continually since.
Wow.
It's quite the history.
It is.
It's really kind of wild when you think about farmers and ranchers moving their goods as far as they did. I've got, my aunt was going through the attic of the farmhouse where my grandparents lived for all my life anyway, and most of my mom and her siblings. But they found boxes of old receipts or tickets from when they would haul the calves down to Sioux Falls, South Dakota. And I mean, to drive that today is a trek. I mean, it's a 6.5 hour drive. And to think back then, they loaded their calves up wagons and shipped them down there, or they took them in when the railroad came through. They took them in and put them on the rail and railed them down there and sold them. And it's just crazy to think of the dollars that they were transacting compared to what we're transacting today. And of course, with cattle at all-time highs, it's just unbelievable.
Yeah.
But that journey that them people went on to move that grain or those cattle was remarkable.
Absolutely remarkable. And one of the things, Jeff, I think you mentioned was about innovation. And the farmers, indeed, the effort that they took to bring grain into the city. And then, you got the railroads and so forth, and that certainly evolved. But, transportation into the major merchandising points. But a couple of the innovations that occurred at the exchange early that we, again, take for granted, but it just completely revolutionized how grain was traded. Two of them were a system of grades and sampling. There wasn't a USDA then. So a way to be able to differentiate grain so that it could be commingled in a grain elevator. And the first grain elevator in Chicago was built in the late 1830s. So the ability to commingle grain, and then the idea of reseeding grain within a facility so that you could trade grain among multiple parties without it having to move to the multiple parties. It could just sit in one location and you could just trade ownership of it. And that really revolutionized grain trade. And actually the center of grain trade in the Midwest US moved from St. Louis to Chicago because of those innovations.
I think that's really important for people to understand, is that the exchange has continued to evolve to support the farming community. It's something that has been exciting the whole way through. The point then became the delivery mechanism, right? Because that, I also believe, is important, to have multiple delivery points of which the grade and quality is standardized. Was that the exchange that drove that, or how did that come about?
They did. And of course, there's some great stories of shenanigans that went on along with that. But a system of grades and a system of grading as well. But as you can imagine, when the registrar of the exchange, the person that's signing their checks, is a member of the exchange that also runs a grain elevator at the same time, there could be from time to time pressure on that exchange staff member to look one way or another when it came to grading grain. So at some point, the state of Illinois stepped in and said, enough of the shenanigans, we're taking over. And those processes have existed at the government level rather than the exchange level for most of our existence, but it did start at the exchange.
That's kind of wild, because you're talking like 1830 and the USDA started somewhere in 1860, or is that?
Yeah, roughly? I think that's right. And it's interesting. It was the 1860s when the state of Illinois took over inspection. So that was part of the learning process as things move from exchange regulated to state regulation, and making it sound like the board was the Wild West. In some ways it was, but what they did and how they brought about organized trade, it definitely was a positive. Anytime you have human beings and trade, there's always going to be those few that are going to be looking for ways to benefit. So there definitely were some shenanigans.
Want more agricultural market expertise? Listen to full episodes of the Hedged Edge podcast wherever you get your podcasts, or visit rcmagservices.com. Get the complete market analysis and strategies you need to succeed.
Speaking of Wild
I'm glad
West, Jeff, I know you're dying to jump on this. We have no government. The USDA is not giving out reports. And
That's right. That's right, Ben. And that's the part that he's mentioned. The USDA didn't exist back when the exchange started. The USDA effectively doesn't exist today because we don't have a government operationally. And so you start to ask yourselves the question is, how are we going to advance the needs that we have today for information without the USDA? And I'm going to go ahead and pose the question, do we even need the USDA anymore after the innovation that could potentially happen as a result?
As of right now, we do, especially on the livestock side. Feeder cattle is settled to our feeder cattle index, which is all based on USDA reported feeder cattle sales in the country and direct reports. We also use USDA reports for doing differentials in live cattle deliveries, and lean hogs and pork cutout is all under mandatory price reporting. So one of the big things when you see a government shutdown coming, we always want to know is AMS market reporting going to be affected or not? And some of the shutdowns, they've been considered non-essential, and those reports didn't come out, and the exchange had nothing to settle against. And other times they were deemed essential, and the reports continued to flow. Luckily, this time, the reports continued to flow at this point. So we haven't had an adverse effect. And then on the grain side, just having USDA price reporting adds additional transparency in the countryside relative to Chicago. So I think, that's a benefit to all. We still rely pretty heavily on USDA, whether it's for livestock settlements or for transparency when it comes to grains and oilseeds. And I should mention dairy too. That all is USDA based reporting as well. So would hate to see USDA go anywhere.
Okay, so we'll give them a break. They need to exist. Let's get this government shutdown taken care of and get these people back to work. Shifting gears a little bit though, but similar topic, I do want to ask the question is from a research perspective, and as you start to think forward about news and information, we're having so many new private companies that have entered the market. We have private companies like StoneX and many others that have existed over the years, and new ones are entering the marketplace for research, yield updates, and we're getting information from China and from Brazil, and you get all these questions of how reliable is that data? How reliable is our own data? Are we going to eventually transition to a spot kind of like when you and I worked at the exchanges and the pit trade had existed? It was kind of slow. You mentioned it. People didn't always get reported their trades in a timely manner, to now it's microseconds. Do you feel that perhaps maybe even this government shutdown accelerates this, but that we get to a point where the information is more real time and we rely on, call it an exchange of information to truly understand where we are with yields and stocks and other things like that?
I feel for certain that we're going to see incredible amounts of change going forward. The technology is just improving every day, right? And satellites, cameras, I'm not one of these people that, oh my God, AI is going to replace people. I don't believe that, but I think AI is going to be a good kind of first step for analyzing all of these data. And then people will ultimately, but it'll be a massive amount of data that will come in, and the AI will make it manageable for a person to evaluate. So I think, yes, we will continue to see evolution, both in private companies, but also I think at the USDA as well. We were just at an event at West Texas and a live cattle event, and some of the interesting things that they're working on from that front. So I think there will be that evolution, and you will see a lot more data available in more real time or near real time as we go forward. And that's important. One of my jobs at the exchange is new agricultural products. Me and my team are responsible for designing new agricultural futures contracts. And, back in the floor days and historically, that always meant physically delivered, right? And that's still the gold standard. Don't get me wrong, but bringing a physically delivered contract to market, designing a delivery mechanism, getting firms signed up for, participating in that. And, it takes a lot of time and a lot of effort to do that. So the cost to bring a physically delivered contract to market is pretty high. So, you've got to have, and again, it's the gold standard. We still do those, but you've got to have a lot of really strong supporting economics for the exchange to make that investment. But you have a lot of these, firms, USDA data, but also, price reporting agencies that are assessing, not just reporting markets, but assessing markets. And one of the areas that, we've had growth is the ability to bring cash settled contracts based on these assessments to market. And they're a lot cheaper to bring to market. So things that historically probably would have never seen the light of day of a futures contract, the calculus is different just because the cost and the effort to bringing it is there. So, that's another area where we see a lot of evolution.
If you're enjoying today's show, check us out on Facebook. Just search RCM Ag Services for market updates and tips. Find us on Facebook today.
Yeah, and I think one to call out that I recently learned about is the new fertilizer contract, the 10-ton.
Yeah.
I think that could be valuable, and there's tons of arguments about size and what the perfect fit would be, and is it more of a producer contract, or can the commercials utilize it effectively? But I think it speaks to the innovation and some of what you've touched on today, and I think part of the challenge is promoting it and getting it utilized so that there's plenty of liquidity, and again, being cash settled makes that a more appealing situation.
Yeah, that's been, we've had fertilizer contracts for a long period of time, but they're more wholesale directed contracts. And the idea was, hey, could we package one of these and aim it more at the producer level? And that's where the 10-ton came from, the 10-ton urea. Let's get some market makers involved. So there's a good two-sided market. And, let's put it out there. That's a major cost point for so many producers. And, a real inability to, other than forward contracting, and then, the elevators being able to have a tool to use could make better forward contracts to producers as well. But why can't we do something at the producer level with respect to fertilizer? And this has been our first test case. And, we've seen some uptake to it. So we're still optimistic about it. But, an idea that can certainly expand, as we go kind of down from the wholesale level to the actual producer level with respect to fertilizer.
I think every producer that I deal with out here really recognizes the benefit of having a futures backed commodity with, contract, because you take sunflowers and peas and some of those type of products, a lot of the pulses, or all the pulses basically. And, sunflowers can be really challenging to market because there's really no, that gold standard you talked about, having that backed by those contracts. And so thin markets, obviously the volumes dictate what makes sense to bring to market. But I think we all can really step back and realize that there's a ton of value in what your company, the CME Group, and others are doing to bring these contracts to the producers or to the commercial side or investors. And so I think that's a take home for people listening is this is a valid tool, and it's been around a long time. It's battle tested. It's evolving still, and those are all great things. But I really appreciate your insights. That's been fun to listen to that
Yeah.
history too.
Oh yeah, no, glad to share those things. And, that's why we're here. And, I've been here, coming up on 24 years. And one of the big things for me is, just because something didn't work in the past does not mean that it won't work in the future. So, at least I encourage my team to also not put on blinders and, it's okay to evaluate something that maybe we tried, a decade ago, 15 years ago. Maybe the timing's right now. So we work really hard to be non-biased, and we are definitely customer driven. That's for sure.
You've got everything going, with short daily options out to the monthly options, the quarterly expiries, and
yep, the short dated options. That's one of the major areas where we've seen growth.
The producers that are starting to tune in, I think the options are very appealing. I think that's why the growth that Fred referenced they're seeing. I think people are afraid of the futures to some degree because grandpa and dad have horror stories from the 80s and early 90s, and they just got smoked. And then if you look at if all you're hearing about is the cattle guys that are hedged, which they're going to be crying the loudest, obviously, uh, they're not making all this money that everybody else that just sat on the sidelines is making. So it gets a bad rap, that if you're hedged in the futures, then you're locked in early. And don't excuse the fact that we have new tools on the cash side too that guys are utilizing, forward contracting these calves way earlier than they ever used to. On
Way
the video,
earlier.
I
Yeah.
talked to a rancher they raise thousands of cows. They run thousands of brood cows, and um, they sold their calves on the video back in like February. And well, we all know what this thing's done since February, but his comment was, we sold too early. We didn't capture all this extra cream that's on top of this market, but we still feel like we did a really good job. And I looked right at him. I said, well, you have to stay the course now because you're in this cyclical selling pattern where you might be able to capture the advantage of the market before a dip in the fall that everybody else is going to sit back on their laurels and wait for the market to be even better later, and they're going to miss it because they're not using any kind of risk management, whether it's forward cash or futures or options.
Absolutely. I have a customer friend, even. He feeds cattle in Texas. And one of his sayings is, and he's always hedged, always 100% hedged. That is his business model. And he always says that you could take my operation and compare it with someone who is not hedged. Any 10-year period, slice it any way you want to. And over that 10-year period, my returns are going to look very, very similar to his return. The difference is that he almost went broke 2 times and I didn't, is how he always explained it.
It's the windfalls.
Yeah.
Yeah. And part of it's peace of mind and stress management. I mean, we talk about mental health more nowadays than we ever have. And when you think about the way he's running his business, his mental health could be potentially way stronger on a daily basis than somebody that's dealing with the ebbs and flows in a market that is riding every day unprotected with that kind of risk. I mean,
Yeah.
Those are the horror stories that we hear.
Yeah. Yeah, for sure. And I don't know, it's tough in the country right now for crop farmers. We have that ag barometer that we do with Purdue University, and
I just got that call.
Yeah, it has just really been it's blood in the water for sure. That's just the nature of agriculture, right? It can be feast or famine. So, your ability to manage your risk around those episodes is only heightened, especially now.
Do you have a link to that barometer?
Oh, yeah. If you're not familiar with it, yeah, if you do Purdue University Ag Barometer, it's like, Michigan Sentiment Index that all of the press follows, on consumer sentiment. This is farmer sentiment. So it's based on the agricultural economy. And it's based on two sub-indexes: current conditions, which are getting creamed right now on the crop side, and then expectations for the future. And that's held up decently. But it's a ag economy sentiment index.
I just actually got this call last week, and because I am technically a producer as well, so they call me and I went through that survey, and I don't think the gal on the other end of the line knew that she was talking to somebody that wears numerous hats, but which doesn't really matter. It just sometimes it can skew how I feel about things.
Yeah, for sure.
So, being it's not my primary interest, it's when they talk about, are you more likely or less likely to purchase farm equipment in the next year? It's hard for me to answer that question. So I try to answer it like what I hear my producers telling me.
Mm-hmm.
That way I'm not throwing this wild answer into the mix and throwing the data off, but one in how many thousands of responses, right? So it really probably wouldn't matter, but I think the sentiment is probably as weak as it's been because of what's going on. I think farmers today, I look back at the last 3 years that I've been in this current role as the CEO of the equity here. When I first got here, farmers were really bullish. We just come off $13 wheat. The market was falling just constantly, and we'd get upticks and then we'd fall back and uptick and fall back. And so it just was really hard to get them to engage in the market for the last 3 years. Now they're giving up. We don't see any hope in the commodities, and that whole emotion has changed so drastically. And that just tells me how bad it is out there.
Oh yeah. And it's a tale of two cities. On the cattle side, it's the opposite. And that barometer, where in the world would it be? Because it's agriculture overall. So it includes, cattle ranchers and so forth in it as well. But that's agriculture. And just, and one of the things I love about markets, people will say, well, don't markets overshoot? Well, they do, because markets are made out of human beings. And human beings, when things are going poorly, they think they're going to continue to get worse and worse. And when things are going great, they think things are going to get better and better. But they never do, right? There's always a turn at some point. And just when, everyone except the Warren Buffetts in the world think it will never change, it does. And, and I'll still argue that markets are a way better way to discover price than a bureaucrat in Washington. But, it's made up of humans, and that's one of the beauties of it.
Yeah, and we appreciate that tremendously, Fred. And the people that are listening here today, you'll recall the reason we brought this podcast on the radio and into the community, and are taking your time and increasing your time to listen, is we want to focus on the importance of risk management in and around producing crops, whether it's corn, soybeans, wheat, you name it, trying to focus on helping people make the right decisions, forward thinking on how they actually are planning to sell and market their grain. And none of that exists without the exchange. And the exchange is, again, the word innovation and willingness to continue to support the local communities. So for those that are listening, if you have ideas of products that you'd love to hear or see, you can call us, you can text us, you can email us, and we'll send it right up the chain to Fred. So the other way is obviously check in with Ben over at Scranton Equity Co-op, and he'll be able to explain all the different products that they use today: futures, options, some of the OTC solutions. And again, reminder as we wrap up harvest and head out into the cold months that none of us want to talk about, that you still have grain in the bins, and we need to figure out the best timing to sell that, of course, but always think there's opportunities to hedge, manage risk, and just put an offer out there to see if you can get something done. So thanks again to everyone who's been listening and sharing their inputs. And thanks to Fred and Ben here for all your time. It's been a great week.
Well, thanks, Jeff, and thanks again, Fred, for bringing those insights. Been a good visit.
Yeah, thanks, guys. Appreciate you having me.